Alibaba hits the road with a monster IPO about to go public. In today's cover story, will consumers have cloudy judgment ahead of Apple's big tech gadget reveal? Plus, analysts are shaking off the latest round of disappointing jobs data and blurred lines between love and money. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Monday, September the 8th. In today's First Look, stocks stay strong. The market rallied Friday with the S&P 500 closing at an all-time high. Gold edged up $3. Oil fell 98 cents. The market reaction followed an unsettling report on the labor market for August, with just 142,000 jobs added to payrolls and the unemployment rate dipping to 6.1%. In overseas action, President Obama said at NATO the U.S. and allies are seeking more sanctions against Russia. Also, traders are bracing for the Alibaba effect as the Chinese e-commerce company readies for its roadshow today. Trader Bill Baruch of iTrader joins us on this Monday morning. Good Monday morning to you, Bill.
Good Monday morning to you, too. Thanks for having me on.
Will we still see some reaction from that jobs number that came out on Friday in the market today?
The jobs number was a major miss, but we're really taking this with a grain of salt. August historically has been a drag, but a lot of the indicators that we at iTrader watch, we were anticipating a better number. And really, it doesn't make sense to see that poor of a number. We're looking to see revisions next month, and really we're taking this with a grain of salt. The ECB was the major event last week, and they've really helped some momentum in the equity market by not only delivering the drop in interest rates, but by delivering the asset-backed securities purchasing as well as bond purchasing. This can really be supportive to the market going forward.
There is a currency craze going on. In fact, it might be a terrific time to go to Europe right now.
Yes. Yeah, the ECB and Mario Draghi, the president, have been trying to weaken the euro, and really that surprise last week with the bond purchases and taking a kind of direction that the Fed did was the kicker here in breaking the euro through 130. So we got a 129 handle now, and this the path of least resistance is lower. We've been bearish here at iTrader for quite some time, and we've been saying that we're going to see this below 130 before the end of the year, and we're already here. So we're even revising that further, and we're looking for this to even possibly get down to 120, by the next 6 months.
Bill, good to have you on the show. Thank you.
Thank you.
The biggest IPO of the year is just days away from hitting the stock market. Joining us now, James O'Malley of Keen in the Market. Good morning. And James, will there be an Alibaba effect in trading today?
I think there definitely will be. They announced that the valuation of the company will be about $160 billion if it prices at the midpoint. We immediately saw a reaction in Yahoo on Friday. I think the tech sector will head higher today, along with Yahoo leading the way.
Thank you, James. Chuck Coppola joins me now with details on Alibaba's IPO roadshow, which begins today.
Angie, that Alibaba roadshow in the Big Apple is underway. The Chinese e-commerce company filed for its highly awaited mammoth IPO last Friday. Alibaba could raise $20 billion in its market debut. The stock is expected to price between $60 and $66 per share. Alibaba will offer a family and friends policy to let employees, their relatives, and friends buy shares at its IPO price before it officially goes public. Kathleen Smith, IPO ETF manager with Renaissance Capital, predicts that the company will be valued between $150 and $200 million when the worldwide roadshow is complete.
After the meetings and the roadshow, the company will come down to a proposed price and offer it at this proposed price based upon the feedback they've received during the roadshow. And we expect that to happen in about the third week in September.
Smith also says Alibaba is the biggest IPO in history, surpassing Visa's $17 billion public debut in 2008.
Well, Apple is the other tech stock in the spotlight this week because of a huge event. Tomorrow, Apple is likely to unveil a much-anticipated iWatch and an iPhone 6. The new release of the phone is spurring activity in the market for older model iPhones.
I think that people don't realize that this market even exists. We've done surveys in the past that show that 60% of people actually just leave phones sitting in their drawers because they think it's too much of a hassle to sell. So the whole re-commerce or reverse commerce market has kind of evolved out of the fact that customers don't sell their phones.
That was Nick Rahman of YouSell.com, a company that buys and sells iPhones. He says customers who sell a 5S in good condition before tomorrow's new release can grab as much as $300. But he says you have to act fast. On the high-end, older generation models tend to lose about 15% of the value in just 1 month following an Apple release.
In today's cover story, the security breach of Apple's iCloud may cast a little gray over Apple's big week ahead. But what about for others concerned about cloud security? Apple's CEO Tim Cook says Apple will add security measures after hackers stole celebrity photos from personal iCloud accounts, including requiring users to provide 2 or 3 codes or passwords to gain access.
That's what they should have done to begin with. They have a lot of celebrities that use their products. They give those products to many of the celebrities. They should have made sure that those celebrities had extra security that surrounded them. They didn't, which is why the celebrities were compromised.
Apple says it will alert users when a device logs onto an account for the first time or when someone tries to change a password. Despite the attention of the iHack, corporations are advised to keep proprietary information on private clouds, safeguarded by numerous passcodes and contracts for accountability.
Many companies and many of my clients, frankly, we've helped them with some of these things, have developed security assessment questionnaires and ways to validate what a cloud is doing from a security standpoint before they put any sensitive data into that cloud.
Right now, Congress is seeking to tighten intellectual property law. Many of the reforms aimed at safeguarding intellectual property in the digital age.
Time is the one luxury a trade secret owner does not have. You have an employee who walks out the door with a hard drive full of thousands of pages of proprietary documents. What do you do?
Privacy Rights Clearinghouse found in 2011 hackers breached 30.4 million records. And since 2005, the number's 18 times higher, 543 million. Most of the break-ins happening at companies with 100 employees or fewer. Now there's a concerted effort to bolster security and insurance.
You can now not only try to shift liability as a company to the cloud provider, but you can also get some insurance that will help if there is ever a data breach or lawsuits that arise out of a data breach. Despite
security breaches in the cloud, reportedly the CIA is going ahead with a $600 million investment into developing its own computing cloud with Amazon Web Services. The goal is to provide service to all 17 agencies that make up the nation's intelligence community.
A hot biotech stock could capture attention this week. Shares of Gilead Sciences fell nearly 5% on Friday. But then buyers stepped in to grab shares, leaving the stock down just 1%. Bloomberg News reports the biotech is close to a deal with generic drug makers to produce its hepatitis C treatment, Sovaldi. The drug is sold for $1,000 in the U.S. to hepatitis C patients. The report says Gilead may drastically cut the price of the drug in developing nations and roll out generics.
Brief but busy. That's what House Speaker John Boehner called a 10-day legislative session, which begins today. Lawmakers are eager to get back home ahead of the midterm elections. That urgency could help both sides of the aisle reach a deal to avert a government shutdown. On Friday, President Obama said he's preparing to take executive action on immigration reform after receiving proposals from Attorney General Eric Holder and Secretary of Homeland Security Jay Johnson.
I'll be reviewing them, and my expectation is that fairly soon I'll be considering what the next steps are.
Today, Senate Democrats could vote on a measure to overturn a Supreme Court ruling on campaign finance. But it's not expected to get support from the Republican-controlled House.
A bumper crop of corn is creating an abundance problem for farmers. Exceptional growing conditions this spring and summer are leaving farmers up to their ears in corn. This year's harvest could even top last year's crop, which came in at record levels. Dan Huber, general manager of the Huber Report Grain Marketing Services, tells us farmers are dealing with storage and transportation problems as the mountain of corn is harvested.
You stress the transportation, as you stress the capacity to hold the crop, they'll take larger margins, and of course that means a lower price to the producer, and particularly if you're in an area where there are no immediate end users such as an ethanol plant or a large livestock operation.
Corn prices are down roughly 13% for the year. However, analysts are not convinced cereal companies and others will lower prices at the supermarket level.
The dollar wars continue. Again, Family Dollar rejected a revised $9.1 billion takeover offer from Dollar General in favor of an $8.5 billion offer from Dollar Tree. Family Dollar says even with Dollar General's new measures to avoid antitrust risks, that the higher bid is insufficient. Analysts say by dismissing the bid from Dollar General, Family Dollar may wind up in a hostile takeover.
Amazon is attempting to bag new business by using the U.S. Postal Service for deliveries. The tech company is launching a 2-month test in Seattle, Los Angeles, and San Francisco. U.S. postal workers truck around with insulated containers of groceries that are dropped off at the doorsteps of Amazon Fresh customers. The drop-offs are happening between 3 a.m. and 7 a.m., which gives added traction to business growth at the post office.
How about an espresso? Starbucks will open about 100 express stores the next 5 years that cater to the commuter crowd. The mini Starbucks will have fewer items on the menu and offer digital order to speed up service. Business at Starbucks drive-thrus is turning out to be more brisk than at some of the chain's standard coffee houses.
Checking out the economic calendar for today, it's the consumer credit numbers for July, and on the earnings calendar, watch for Piedmont Natural Gas, Campbell's Soup, and Casey's General Store. Still to come, the dating app that could turn into a match made in heaven for investors. Plus, why the latest job data is more optimistic than you might think. And is the S&P crossing 2,000 again a sign to sell? We'll be right back. The troubled jobs report for August is partly being blamed on the MarketBasket CEO drama. A commissioner with the Labor Bureau tells the Wall Street Journal employment in August at U.S. food and beverage stores fell by 17,000, and the industry was impacted by employment disruptions at a grocery store chain in New England. It's believed thousands of MarketBasket employees who protested the firing of their CEO may have applied for unemployment benefits. Bill Mahler has more now on the unemployment report, including an interesting twist. Bill.
Well, Angie, as you noted, the latest employment and unemployment numbers are out. They're still being digested. Here they are, measly 142,000 jobs added in August. The unemployment rate dropped a tenth to 6.1%. Pretty discouraging about jobs growth and jobs recovery. So what do the data tell us? Let's talk to Brent Schutte, the senior investment strategist for BMO Global Asset Management. These numbers were really way off what were expected on jobs added. Do you think these are going to be revised?
I do, actually. I wouldn't get too discouraged about the numbers, and we've talked a lot about revisions in the past. And so I actually went back and looked at revisions over the past few years. From 2010 to 2014, the average monthly revision has been about 30 to 60,000 per month. And so that has added, if you look back at that time period, we've added about 2 million more jobs than was originally reported over the time period. Taking a step further and looking at August, in particular, over the last 3 years, the August numbers are the second highest revision, about 70,000 on average over the last 3 years to the positive. And so I do think the numbers will be revised higher, and certainly they do not mesh with any of the other strong U.S. data that's been out lately.
All right, let's dive deep. Let's talk about the 3 Ps. That's part-timers pay and the participation rate.
Participation rate did not tick higher, and so it's actually stuck at 30-year lows. It's stopped falling, but it hasn't moved up. That, to me, possibly means there's less labor market slack, which then weighs into pay. You saw average hourly earnings for non-supervisory and production people actually tick up 2.5% on a year-over-year basis, which is an acceleration. And so that's actually a decent thing that pay is starting to move higher. And the last P, part-timers, you're actually starting to see more full-time people being added to the payrolls, which is a positive. There are a lot of part-time people who would like to work full-time, and you're starting to see on a rolling 12-month basis that occur.
We still have a skills gap, though, don't we? Because there are a lot of jobs that are going begging, looking for people.
Absolutely. You look at JOLTS, for example, which is the cousin of this employment report. So you take a look under the hood, and there are more jobs open today than there were at any time during the past recovery. And so those jobs are there to be taken, and no one can take them right now, and it's taking more time to fill them.
Sounds like downstream we've got to make some adjustments in either training, even into education.
I guess the good news is I think that's already occurring. If you kind of look and you talk about what's happened over the past 3 or 4 years, that's where we're going. And you're seeing companies adding training programs, you're seeing education being rethought, and I think that's actually a positive longer term for the U.S. economy.
All right, Brent Schutte, good stuff. Thanks so much.
Thank you.
Coming up, a high-profile divorce puts prenup principals in the spotlight. And after the break, a dating app has investors checking out what could become the next big investment in dating. Stay with us.
Investors seem to think dating app Tinder is a real catch. Barclays is predicting that Tinder's valuation will hit $1 billion by the end of next year. Tinder is owned by Interactive Corp, which is up 44% over last year and closed Friday at $72. The app lets singles browse potential matches through their smartphone and helps set them up on a date.
Well, those dates may lead to a proposal, which may lead to a prenup. Joining us on set this morning is divorce attorney Gemma Allen of Ladin and Allen. Good to have you back on our show.
Hi, good to be back.
Well, Crane Chicago is reporting on a high-powered couple that is divorcing, and it's getting nasty. It's between Ken Griffin and Ann Diaz Griffin. She claims she was pressured into a prenup. Is there such a thing, and will that hold up in court?
Well, stay tuned because it's going to be interesting. But yes, if the agreement is not voluntarily signed, then in fact the agreement would be challenged effectively. But the bar is so high for what is involuntary. You have to prove duress at such a level that it'll be interesting to watch how this plays out.
You've been doing this for quite a while, so what are some of the crazy cases that involve prenups and pressure?
There are cases where someone was signing a prenup in the back of the church. I
That's
consider
last
that
minute.
a little bit last minute. But you know what? Some of the judges, particularly since this new act, which is a premarital act that's effective in Illinois since 1990, some of the judges say you could just say no. You could just walk away. So you're not under duress, even if it's the day of the wedding. But I say as a woman to you, and I think many women and many guys would also say, I don't know, is it that easy to walk away? If you've got guests there, if you've got company, if you have people flown in from all over the world. So it's an interesting question.
What's an easy way to broach the subject? Should you bring it up early so you do not end up in this situation?
Absolutely. You know, the earlier the better, the more honest and vulnerable you each are with each other, the better, the more financially transparent, the better. We can't hide this. It's an elephant in the living room. Let's start dealing with it and make it our own elephant.
Gemma, always a pleasure to have you here.
Thank you. Thank you.
Still ahead, find out why the stock market just keeps heading higher. Chart Talk is next. Deming of Equity Armor Investments joins us on the show this morning. Good morning, Dan. And after that jobs number disappointment on Friday, are you surprised that we're here today talking about the S&P 500 at an all-time high?
Well, I mean, I tell you, it certainly didn't look that way last Friday, Angie. Initially, we saw some weakness in the market, and the market struggled in the first part of the day, but strength built in the afternoon, and we saw the market close the S&P, in terms of the S&P, at new highs. So, yeah, a little bit of surprise, because typically when you kind of get these news items, particularly a lot of news came out at the end of last week, and you kind of buy that rumor, sell the news scenario. You saw it happen early in the morning, but then ultimately we saw the market catch up and really close up strongly on the close.
What do you think is holding up this market? Is it the Fed? Is it the economy? Is it consumer sentiment?
Well, I think it's a combination of all those, Angie. Certainly, consumer sentiment appears to be pushing higher, and I think that's going to help support the market. You also have the Fed in there, but I think right now the Fed being, even though our liquidity provisions here in the United States are winding down, the Fed has made it very obvious that they're going to continue to support any kind of structural issues that they feel that they have to contend with moving forward. So they're going to be very dovish in that sense. And now you got money flowing into Europe for a temporary fix over there, and it was perceived pretty positively. We saw most of the European equity markets up very significantly last week.
What are you doing with your money?
Well, right now, we're kind of, again, we've taken advantage of this run-up off of the August lows to kind of reposition ourselves, and we are kind of repositioning up here with the S&P up over 2,000. We feel it's a little bit overextended at this point, so we actually rebalanced it over the last couple of weeks where we sold some equity exposure and actually put it into volatility exposure because we feel from a risk-adjusted standpoint that's a better way to kind of play this market right now. It just gave us the opportunity to rebalance our portfolios, keep them basically where we like them, and increase our volatility exposure.
Thank you, Dan.
Thank you.
Thank you for watching our show today. Coming up tomorrow, the importance of paying off your house before you retire and tips on how to make that happen. From all of us at First Business, have a great Monday.